We're happy to have Bruce Campbell in studio once again. In your past interviews, you talked about employing a top-down, bottom-up approach to investing. Can you explain what that entails and give some examples of how you've used this method successfully?
Yeah, so we really use a top-down approach to help us figure out whether or not we're on offense or defense at any given time. And the tools that we use help us to bring the cash level in the portfolio up, and also the companies that we hold in the portfolio either more defensive or more offensive in nature. And just an example of that would be that, you know, a year ago in October of 2015, we actually saw the indicators that we follow on a top-down basis break down, and so it put us into defense, and we held a defensive position until around March of this year. And what that meant is that we increased the cash levels in the portfolios. We're always adjusting those, but they, you know, during that period of time, they were somewhere in the sort of 20 to 45% range. And then once we got the sort of all clear and moved back into offense when the indicators improved, then at that point in time, you know, we put the portfolio back to work for really capital appreciation. The bottom-up portion of the process really has a two-pronged approach. So we're looking for companies that have some sort of catalyst in their business that's going to change the profile and have some sort of acceleration in their earnings profile. So we're looking for that from the bottom up. And then as well, we look at technicals. So we want to see stocks that are strong, both technically and fundamentally, before they go into our portfolios.
As 2016 winds down, what is your outlook on equity markets in 2017?
Yeah, so right now, looking at the North American equity markets, we look at a number of different factors from that top-down perspective. So we're looking at both technical indicators on the market, but also economic indicators. As of right now, the economic indicators are all strong and favorable. We continue to see those improving as an aggregate. So if you combine that with the look at the technicals, then, you know, right now we're looking at 2017 to be positive. Typically, you know, the strongest period is from that November to May timeframe. So we're just coming through the weakest period and heading into the strongest period. So, you know, as of right now, we're on offense with our portfolios.
What is your opinion on gold investing? Do you think precious metals will break out going into the new year?
Yeah, so gold's had a huge run in 2016, and then, you know, just of late we've seen a bit of a pullback. We think that you know, it could be setting up for another move higher, and we think there's a couple of reasons for that. One is that, you know, if you take a look at interest rates and inflation expectation, you really saw things bottom out in kind of that February timeframe. Gold started to move prior to that, and if we are seeing a period where we're going to see some sort of inflation and creep into the economy, and you've seen those numbers pretty much globally now, then that's a environment where gold prices are going to continue to rise. The second factor that we look at is we really start to question whether or not investors globally are starting to worry about the credibility of some of the central banks and what effect they're having. And so as a result, just a flight to safety, we think that gold could appreciate.
You've talked a lot about marijuana stocks in the past. Seeing that valuations keep getting higher, what would be your advice to investors interested in the space?
The marijuana sector is one that really has hit the spotlight here in 2016 and probably will continue to be you know, in the spotlight through probably the next couple of years as we move towards this recreationalized market here in Canada. Investors need to be cautious in that, you know, these stocks tend to have big moves up, but can also have fairly big moves down. If you're looking at it from a longer term perspective, you know, I think that there's a lot of room. It's going to be a huge industry and a huge growth industry over the next 5 to 10 years. That being said, you know, the animal spirits can sometimes take over control, and you can see, and, you know, stocks that really run up, and we've certainly experienced that through sort of the September-October timeframe, where, you know, some of these stocks have doubled or tripled over that timeframe, where the fundamental business hasn't really. So you need to be cautious. If you don't have a position and you're building a position, you probably want to, you know, do it slowly and wait for pullbacks, or, you know, for financings, or a combination of the two. If you have a longer term perspective, then, you know, the short term doesn't really affect you that much.
Which companies do you think will continue to outperform?
Yeah, so, you know, a few of the ones that we've invested in and we continue to like. The first one would be Organigram, which is the licensed producer out of New Brunswick. I mean, they have some secret sauce in their recipe as far as being organic, but as well, they have a real cost of capital advantage because they've raised a lot of capital and we're sort of first to market. And then their production costs as well are a lot lower than others because of the government programs on labor, and then also their cheaper access to power. And then if you just looked at sort of valuation of the big four, Metrum would be the one that kind of stands out in that they're established producer, and their valuation is always a little bit cheaper than the other three. So those are really the two that we like. Certainly Afria and Canopy are both going to be strong contenders as well over the years to come. But right now it looks like their valuation is probably a little bit ahead of where they should be.
And which other stocks do you like at this time, and why?
Yeah, there's a couple of interesting little companies that we've tracked for a while here and now have just entered into and just in the last little while. The first one is a company called Grand West Transportation, and they're almost a baby version of New Flyer in that they produce this vicinity bus, which is they really have three models: a 27.5, a 30, and a 35-foot version. And what they are is they're smaller transit buses for transportation and transit systems. They're more fuel efficient for routes that aren't quite as busy, and they're long-term quite durable. They have a 12-year life on the bus. And if you take a look at where they are with their orders, management hasn't put out official guidance, but in their presentations, they're saying that they're going to earn somewhere between 4 and 24 cents in their 2017 quarter or year. So with the stock trading at around $1 right now, you probably could see it kind of anywhere in the $1.50 to $2 range over the next year. And they're just starting to get traction. If you follow the company from a news flow perspective, it seems like every couple of weeks they're picking up more orders for buses. So that's one we like. The second that we like is in sort of a similar business. It's called Pacific Insight Electronics, and they're a contract manufacturer in the automotive industry, and they've really focused on LED lighting. And the company tends to grow year over year, but quarter over quarter they tend to have sort of lumpy quarters. So one quarter is quite strong, the next quarter may not be. And they just recently came through a quarter that wasn't quite as strong. The stock sold off, which has created quite an opportunity here. It trades at really less than 8 times earnings, and this is a company that probably could trade more in the sort of 12 to 15 times earnings. They really have, their competition is massive, companies like Visteon. So really, they're just scratching the surface on the business that they could get. So it's one that over the next sort of 5 to 10 years could grow to be a fairly established producer.
Thank you for your time, Bruce.
You're very welcome.
Keep yourself in the loop by watching more expert interviews on Small Cap Power.